Today in crypto. Walmart, NYSE, WMT, has partnered with coin cashing machine company Coinstar and crypto cash exchange Coin to install 200 Bitcoin, BTC, ATMs in its stores across the United States. Although the pilot includes only 200 kiosks, the broader launch plans to eventually see the installation of 8,000 Bitcoin ATMs across the country, according to Bloomberg. There have been no further details on timelines as of yet. Continue reading on Coin Telegraph. More than 1 million people are on the waitlist for Robinhood's long-awaited crypto wallet, according to CEO Vlad Tenev speaking to Jim Cramer during CNBC's Disruptor 50 summit on October 21. Tenev stated that was very proud of Robinhood, NASDAQ's progress in crypto, as he highlighted the firm's recent push to provide a crypto wallet for its users. Continue reading on Coin Telegraph. The social media activity of influencers directly affects crypto prices. TikTok has updated its community guidelines to prevent the spread of pump and dump projects. Known personalities, including Jake Paul, have promoted shallow crypto projects. Bitcoin and cryptocurrencies gain notice on bulletin boards, where information about their value was disseminated by what are now called crypto maximalists. As crypto gained more mass acceptance, social media became a primed digital locale to distribute learnings and data about existing or upcoming cryptocurrencies. With an abundance of social media gurus spread across social media platforms, how would the market react if they suddenly were banned? Is there a difference in influencers? There is a staggering contrast between self-proclaimed influencers and social accounts, especially on Twitter, NYSE, TWTR, that act as influencers but don't seem to call themselves one. According to Influencer Marketing Hub, influencers have the power to affect purchasing decisions through their authority and relationship with their audience. Glauber Contesato, the Dogecoin millionaire, told Daily Coin in a Twitter message that crypto influencers are just individuals that have had some sort of success in the field, and their opinions are valued by their followers. Moreover, he notes a difference between shillers and those who provide qualitative insights from within the industry. As markets mature and there is a bigger influx of new and inexperienced users, influencers will impact market prices. Research on forecasting crypto asset price using influencer tweets reveals influencers' activities, especially on Twitter, are affecting the price of cryptocurrencies. However, the end result of any indirect interaction between influencers and crypto leads to price fluctuations. The speculative industry. This isn't financial advice is a prevailing phrase found on many crypto Twitter accounts, because as Glauber Contesato says, people should make decisions based on their research. New York Times columnist David Siegel compares crypto purchases with spectator sport, where the louder the noise generated on social media, the higher the perceived worth. However, that's far beyond how value is attributed to crypto projects. The Dogecoin millionaire told us that he didn't go all in because of fundamentals or utility but because I knew social media and the media, in general, would be the most powerful tool in the success of Dogecoin. This illustrates how the success of a project is more attributed to the buzz and hype it can generate instead of the value added to the network. With research showing only 9% of crypto investors fully understand the technology, the market gets infiltrated by messages that build on human emotion, including FOMO, to gain funding without rendering the usable end product. On the flip side, influencer marketing is a marketing process with the best ROI because it can create urgency in crypto. Traders need to make their own decisions and use influencers as a ballpark guide. Opinion leaders reinforcing crypto celebrity or sports crypto endorsements such as the Crypto.com and F1 partnership help create an association between consumers and crypto products. However, shilling and hidden promotions done by the likes of the late John McAfee, Jake Paul, or Kim Kardashian discredit existing efforts by opinion leaders to educate the public, mostly on crypto Twitter. What's more is that as a response to growing concerns about crypto scams following the meme coin mania generated by Elon Musk and propagated through social media to young and novice investors, TikTok has altered their community guidelines and dimmed the amount of FinTalk, financial video on TikTok, on their platform. With Bitcoin bulls such as Anthony Pompliano educating followers on crypto in the markets, The notion of influencers affecting crypto fades simply because their following is more niched into the industry. While crypto benefited from influencers' reach to gain mass media exposure with every crypto epic, influencers become a short-term marketing tool for new or existing projects. Why you should care. Social media influencers and opinion leads continue to affect the price and action of the crypto market depending on the state it is in. Thus, influencer efforts are minimized during a bear market and potentially maximized during a bull market run. Email newsletter. Join to get the flip side of crypto. Upgrade your inbox and get our daily coin editors picks 1x a week delivered straight to your inbox. Contact Form 7. You can always unsubscribe with just one click. Continue reading on Daily Coin. With Bitcoin rallying, all the focus has been on predicting where the price of the asset will be by the end of the year. The digital asset is undoubtedly going to enter a period where various crashes will send the price down, popularly known as a bear market. Not a lot of attention has been paid to where the price of the asset might bottom out when the market inevitably goes into another bear market. This usually long stretch of low momentum has seen Bitcoin lose 94%, 87%, and 84% of its peak value respectively in the last three bear markets. One recurring theme of the bear markets has been the diminishing percentages of total value lost. At this rate, it is expected that BTC will see between 75% and 80% loss from its peak this cycle. Market analyst Justin Bennett uses this to predict where BTC will bottom out next. Bennett put the next Bitcoin bottom at $50,000 after analyzing the possible price movements of the digital asset. With the current cycle, the analyst sees the price of Bitcoin hitting $200,000 before the bull run is over. Hence a 75% to 80% pullback in a bear market will see the bottom of the asset land around the $50,000 range. Related reading: Bitcoin leads charge of large-cap altcoin dominance in October. This bottom is solely based on the cryptocurrency hitting the price range that Bennett expects the asset to peak at by the end of the rally. If BTC does not hit this price point before the bull rally is over, then we might see a BTC bottom land at a much lower price range. Bennett's pullback analysis has a lot of credit given that markets are historically known to see lower pullbacks as assets mature. So the 75% to 80% mark does resonate with what the market is known to do. However, if the price of BTC falls short of Bennett's prediction or doesn't move the needle much from its current price point, then the BTC bottom may land in the $10,000 to $15,000 range using the pullback analysis. Bennett's analysis did not focus solely on the crash of the digital asset. He put forward his argument for the price of BTC at $200,000 using technical analysis of the market. The analyst points to Fibonacci extensions as indicators of where the price of Bitcoin may peak during this cycle. For the Fibonacci extensions, comparisons between the 2272 and 2414 extensions from previous cycles have both given a target area which the asset had hit both times. Going by this, Bennett sees the asset peaking between $207,000 and $270,000 before the current cycle is over. Related reading: Bitcoin new all-time cleared, $100,000 straight ahead. Moving forward, the analyst plans to use the monthly RSI to time market exits. Notice how BTC tends to end cycles when the monthly RSI reaches above 90. Bennett says it's also exhibited a double top pattern each cycle, which leads me to believe it happens again. Bennett plans to use a combination of net unrealized profit/loss, NUPL, and the monthly RSI to slowly exit the asset over the next couple of months. Historical data of the CoinDays destroyed indicator versus the Bitcoin price may suggest the metric can help predict tops. As explained by an analyst in a crypto Quant, the CoinDays destroyed metric might be a reliable indicator for BTC tops. A coin day is defined as the number of days that a BTC coin has been unspent for. One Bitcoin remaining unspent for one day accumulates one coin day. Other amounts of coins follow linearly from this relation. For example, 0.5 BTC would have only half a coin day in the same period, 1 day. When these coins are spent, the coin days are destroyed in a sense as the value would reset back to zero for the coins. The metric that keeps track of the amount of coin days being destroyed is precisely the CDD indicator. The coin days metric is helpful for getting an estimate of the in the above chart. The analyst has marked all the important bull runs in the history of the coin. Interestingly, whenever the indicator has made a sharp spike, Bitcoin has made a top. Related reading, DeVere CEO, Bitcoin cemented as mainstream. Investors should consider crypto. The trend makes sense as a lot of long-term holders dumping their coins would naturally lead to a dip in the Bitcoin price. However, the metric hasn't always been perfect. As the latest bull run in early 2021 shows, CDD peaked earlier than the actual top and its value was much lower when the real top was made. And in 2017, the indicator made a false peak before the real top. At the time of writing, Bitcoin's price floats around $63,000, up 6% in the last 7 days. Over the past month, the crypto has gained 50% in value. The below chart shows the trend in the price of BTC over the last 5 days. Hit the like button and subscribe to the channel.